I don't think we're going to see that this year, meaning 2025. But certainly, I think we have to start lining up behind it and still exposing where it's going, because that is the change in business. And I will say, if you're adopting early, you stand to gain the most.
This is the PMP Industry Insider Podcast.
Hello, everyone. Welcome out to yet another episode of the PMP Industry Insider Podcast, where we take a look at what is changing in the pest control and lawn care industries, and we take it to the front lines to those that are driving those changes. I'm Donnie, Shelton, owner of Triangle Home Services, which has Triangle Pest as well as Triangle Lawn, my two favorite companies, I might add. And with me is the notorious Mr. Dan Gordon. Dan, would you like to say good morning, introduce our fantastic sponsors, as well as our topic, and two very special guests?
All righty. Dan Gordon, PCO Bookkeepers, M&A specialists. We provide accounting, CFO work, tax work, exit planning services to the pest and lawn industry. And if you are interested in marketing, please visit our sponsor, Coalmarch by WorkWave. That would be coalmarch.com for digital and non-digital marketing. If you're interested in industry-specific insurance for the pest control industry, that would be PestSure, and that's pestsure.com. And additionally, our last episode was kind of interesting and lend some credence to our peer groups and what they stand for. That was with Steve Durham. But if you're interested in joining a peer group, I think we have another one forming right now. You should probably look at our website, pmpindustryinsider.com/peer groups, or go back to episode 136 and take a listen. And I think I got everything right.
You did. And the only thing I would add to that is, that episode we did with Steve, I had not intended that being a success story as far as peer groups, but it did have a big impact, and I probably should have thought about that. But we're dealing with limited.
We for several years we beat him up pretty good in the peer group, and it wasn't just us; it was people in the peer group. But
sure,
man, he turned it around and
killed it.
And made millions. So
he did. He most certainly did.
Anyway, so today we're talking about end of season wrap up. We're here about a few weeks from Pest World, but
right on the doorstep.
Getting toward the end of the season, and so we wanted to talk about that. And our two guests today are a couple of our favorites. It's Donnie and I.
me, myself, and I. Maybe it's 6 guests.
Yeah. So today, let me read the
intro. Yes.
Today we are diving into an important topic, wrapping up the busy pest control season and discussing the state of the market, from economic factors like inflation and interest rates to industry-specific trends. We'll break it all down, maybe, and give you the insights you need to finish the year strong. Wow, that's
and he didn't. By the way, if you're listening, he did not read one word of that. Just in case you're right, it was all on the fly. So, I have a couple things I need to.
Word.
No, you did not. Okay. There's a couple things though, I think, before we get into this, that I need to kind of get in front of. And I was thinking about this over the weekend. Back this time last year, I was saying a recession's coming. A recession's coming. Like, all the lights are flying. And we talked about the inverted
curve.
Yeah, the inverted curve and all these other. And I don't know. We're told that we did not do an inflation. Listen, let me just kind of give you what I am seeing, and then we'll get into the pest control market, because I think there are factors here that we need to talk about, right? There's economic factors. There's obviously what's happening in the market, and then kind of putting those two together as to what that's going to do to our industry. Here in Raleigh and in Charlotte and in other markets that we're in, the reality is housing has slowed down quite a bit, and our business feeds on movement. Meaning, when people are moving a lot, that tends to fuel a lot of our industry growth. That's a general statement. It's not true. I mean, don't take it too far. Mm-hmm. But as a general rule, the more movement there is in the housing market, the more opportunities it creates for growth in our industry. And that makes sense, right? Where you're building houses or moving or whatever. You know, if the economy's had a recession, if it's not had a recession, I don't know. I'm not an economist, but I will say this. Certainly, from everyone I'm talking to, and certainly from what we're experiencing as a company, we are absolutely seeing a challenge or more difficult. Um, I'm trying to think of a best way to say this. We are having a much more challenging year than we've had in the past few years. Now, some of that is because, I've had a Jerry Springer show going on with Triangle. And if you listen to the podcast, I think we're on the backside of that. I've talked about it several times. But even with friends, who are selling homes, they're not going as fast. And before it was a home was on the market for a day, then there were six offers in and they were over the asking price. That's not the case now. That's at least not in the markets that I'm in. I mean, these houses are up. They've been up for a month or two at a time. Obviously when, increasing rates did exactly what it was supposed to do, which is, it cooled off the housing market, at least in the markets that we're in. Now, did it kill it? No, it didn't kill it. Are houses still selling? Yeah. Is it anywhere near the rate that it was before? Absolutely not.
And
Absolutely.
that's, it's kind of interesting. So years ago, talking with Ed Bradbury, who he had started Viking, and he was my mentor. And he once said something interesting. He said, in a really, really strong economy, that's not good for us because we can't find help. In a really, really bad economy, we can't sell to our customers. So that's not good for us. That middle, right in the middle, is where we want to be, where we can find good employees and we can sell our services. And if you look at the textbook definition, I think Tim Mulrooney probably had a better definition, but contemporary wisdom is that a recession is 2 down quarters on gross domestic product or gross national product, right? And we haven't had that. We've definitely had inflation, and it popped quickly, but they put that right back in the bottle. I mean, it took a little bit, but they put it in the bottle. That's not to say prices are going back to where they were, but the increase, the rate at which they're increasing, is back down to a manageable rate. So did we dodge a bullet? I don't know. It certainly seems like we did, but we're not, 2 or 3 years ago where the economy was just, on
Well,
fire.
there's
Not so
also
sure that
this
was a great
idea.
thing.
Well, there's this other idea too that, just because of the overall, you got to think about there's a macro economy and then there's a micro economy. And you and I talked about this quite a bit when inflation was taken off and everyone's like, oh, inflation is up 6%, the CPI. And I went through the math and was like, no, actually for our industry, it's more like 16 to 17%. I think when we get to the macro economy for our industry, we probably did. Again, you obviously have the pest index. You have the numbers, right? But I'm talking about growth, not just revenue, right? Because revenue, it takes a little while for revenue to catch what's actually happening in the marketplace. Like if I'm selling a ton of accounts, and then all of a sudden my recurring account growth slows, it's going to take me a good year to actually see that in the revenue because I'm riding the wave of everything that I sold before.
That's
And
right.
so the reality of it is that I wonder if you were to, and I've not done the math on this. So when I say this on the podcast, obviously I'd have to back this up with math, but this is just looking at raw data, looking at big picture trends, looking at big picture numbers. We probably did experience somewhat of a recession in our industry because I will tell you, everyone I've talked to is having a problem with net accounts. Everyone, net accounts. When I say net accounts, what I mean is sales minus cancels, you net out positive. Now, that doesn't mean that everyone is like killing it or is losing or bleeding accounts. All I'm saying is that this year has been much more challenging with net accounts than it has been in the previous years. And I can attest to that for Triangle.
But
We
it
certainly.
could be if you just kind of apply the economic concept of elasticity, right? So when you raise your prices that much,
Yes.
even whether there's inflation or not, you're going to get people who say, would you buy my service at $100? Yes. Would you buy it at 101? Yes. Would you buy it at 102? Maybe. Would you buy it at 103? No. Right.
Right.
So we've raised our prices,
Mm-hmm.
to counter the whole inflation thing. So could that be it, right? Because what we're also seeing is that a lot of our clients are doing exactly what you said. their customer count is anemic, but they are growing revenue wise, and their profit is higher than it's been. But in inflation adjusted dollars, is that profit really higher than it's
Right.
been? And I don't know the answer to it, but what I will tell you is that the price increase thing has added, even though our customer count is even, that's added to the revenue increase. And for several years with this pest index that we did, it was perfect. It was just lined up. It showed the growth and nobody argued with it. This year, it's a little topsy turvy, right? So I think it was June was like 8%, and July was like 14%, and then August was down to 7%. I don't know what's going on there. Is there a blip always the summer? It could be weather related and whatnot. But the neat thing is that it's up, right? So revenues are up. And so, yeah, there could be an inflation adjusted recession going on with our industry, but people are still making more money than they've ever made in our
Yeah.
client base.
Yeah. I mean, and I would say that's probably across the board, right? For me, I mean, obviously, I look at revenue growth and I look at profit. I'm looking at all the fundamentals just like everyone else. But where my real focus is as an entrepreneur is on the net accounts, right? The leading indicators, not the lagging ones, right? That's where I'm really playing, and that's where I spend a lot of my time. And I will tell you, the inflation and raising prices, like there's nothing left in that chest, in that tool chest, right? I mean,
That's
there's
right.
nothing, there ain't no going back. I mean, if you missed that opportunity, and we've said this before, that ship has sailed. The
Absolutely.
last thing I would do right now in this economy is raise my prices significantly. That's not to say don't read what I just said is don't raise your prices ever or don't raise your prices at all. I'm not saying that. What I am saying is that these large, massive price increases to quote unquote, catch inflation, those days are gone. And we're just not seeing that. I don't see that really anywhere. You remember back before when inflation was taking off? I mean, Dan, I was getting like everyone was raising prices, right? I mean, it was just so common. You go to the grocery store, prices are going up. You get your power bill, it was going up. Your phone bill. I mean, everyone was raising prices. I don't see that now,
No.
and certainly I would
But
not be doing it.
that is exactly what's going on, right? So they've put the genie back in the bottle.
Mm-hmm.
Inflation, which is the rate of change, not the change itself,
Right.
has come back in. So that's why people aren't raising, because the inflation rate is much lower. But it's definitely taken a toll, and it needed to be done. I'm actually writing an article right now on the profit and loss.
Listen, I'm not complaining. No, I agree
Yeah,
with you. It absolutely needed to be done.
the,
But the net result of that is that customers are much more price sensitive, in my opinion, than they were a year and a half, 2 years ago. I'd say probably more like 2 years ago. But before everyone just kind of accepted, yeah, prices are going up. Yeah, this is all part of I don't get that anymore.
Well,
Yeah.
here's the thing. So this article is about the pest control pricing, or the pest control P&L model, right? And it's really a puzzle, right? Should be 50 to 55% gross margin, maybe some more, some a little less, and then 20% to owner, right? But during the throes of the inflation, that those numbers shifted because you couldn't keep the price increases up quick enough. But now they're back to where they were. This is a model that's, as long as pest control has been around, this is the puzzle. This is the way a P&L works. So you have to raise your prices in order to get these margins. Now, there is something in this day and age that there wasn't 20 years ago, 50 years ago, and that's technology, which can make you more efficient. So that will make everybody more efficient. But it's a really interesting phenomenon what's going on now. And I agree with you. You're not going to be raising your prices 10 to 15%. But just do
No.
remember, a lot of what we do is nickel and dime. And I'll ask you this question. You raise your prices 5% on $100 stop, it's $5. Do people really see it unless you send them a letter that says, due to our cost increases, we need to raise our prices $5? Just do it.
Well, there's a few things. One is that,
By the way, check with your lawyer before you do that, but go ahead.
oh, the disclaimers. So yes and no. I mean, listen, door to door has added a level of competition, and especially in key markets that you just cannot ignore. And they are, typically with door to door, they're typically selling top market, right? They don't, generally speaking, they don't sell bottom market. But at the same time, when I say that, realize that they also will sell bottom market as well to get the sale.
Mhm.
A lot of companies. So you can't assume that, well, they're always going to be top market, because they will until they realize they're not going to get that sell, and then they go low.
Well, but
If that makes sense.
what you just mentioned is a really interesting fact. So you see a lot of people, well, uh, that their account that the number of accounts or the count of accounts are flat and whatnot. And one of the things that a lot of older people in the business, they're still not believing that door to door is nothing more than a flash in the pan, but it is a viable marketing technique. And if you look at digital, it's actually not that door to door is coming down, but digital is going up, and the door to door is becoming more desirable. And you got to understand that those guys are taking some of your accounts, and maybe
They most
that's why,
certainly are.
because we have a ton of door to door clients, right? And they'll go into a market, and in no time flat, there'll be $1 million or $2 million, right? Where does that come from? Where are all those extra accounts? There's
Yep.
definitely an element of people who never had professional pest services before that they're showing it to, but they're definitely taking some of your accounts, right?
Right. Right. So let's switch gears here. So let's talk about, we've been talking about economic factors and what that's been doing to the season. I mean, for me, and obviously I have a few data points, but nowhere near the data points that you have, Dan. Obviously, I don't have a client of customers that share all their financials with me. But you know, the season overall, if I were to recap from what we're doing to, obviously friends I have in the industry, most folks are up in revenue, most folks are up in profit, and most are struggling with either cancels or net accounts. That's been kind of, and I can put Triangle in that category. We certainly fall into that category. What are you seeing from a macro level? Are you kind of seeing the same trends, or is there other trends that you think are happening that we need to talk about, and why? We'll
Yeah,
get into the why a little bit later on, but
yeah. I mean that's what I'm seeing. I'm seeing that the growth isn't as great as it was a few years ago, and there's a whole bunch of reasons for that: economic stimulus, all that kind of thing, and also
mhm.
the economy slowing a bit. But we're seeing that, but we're also seeing people becoming more efficient, and the profits are staying the same or increasing. And again, as I said before, if you adjust for inflation, maybe those profits aren't as good as they look, but the headline numbers are, yeah, we're doing more tax planning for people than we've ever done.
Right, right. And let's talk about some of the factors that could be driving some of that. I will save the political factors for the end because I'm sure it'll get entertaining. But the economic factors, we've spent a lot of time on this already, but there's obviously been the curb on inflation, and that's, in my opinion, that's had a big impact on our industry. And I think anything that we're going to be right lockstep with what's going on in the housing industry, because not to the point that we take the devastating losses that they do or the big high gains that they get. You've said it before. It's not a get rich quick scheme. It never has been. But there is an impact, right? We live and die on movement. When people are moving into their house, that's when they're most likely to be interested in services and those types of things. But so there's the economic impact of interest rates and raising interest rates, and now them coming back down. What do you feel like this cut on interest rates? And again, I know I'm asking you to kind of like get you more towards the housing side of things, but you know, do you think? And I mean, I have my own opinion on this, and we can kind of maybe we're on the same page, maybe we're not. But do you think this rate cut that they did is going to have a big impact on the housing industry? Do you think it was enough?
That's the problem. It's not enough, right? So everybody's sitting on their 2 and 3% mortgages, and they're not leaving. That's
Right.
why
Hmm.
we don't have this housing crisis that we usually have when you go into these kinds of economic times. Everybody's sitting on their, okay, so let me sell my house and make a big fat profit on it, and I want to go buy a new house, but now I got to pay 4 points more than what I was sitting on in a mortgage. So I'm getting the same or less house for more money. So that's
Right.
so I think that you need to have a big cut. But I think what they by raising interest rates the way they did and as quickly as they did, that is what stopped the inflation. And there was
Mhm.
no other way to do it. It was totally
Right.
ripping off the band-aid. Now, how do you get back to where you were? And do you want to get back to where you were, or do you want to get to somewhere between here and there? Right. Because where you were, 0% was not realistic. Right.
Mhm.
So
Yeah. Yeah. You know, I wonder if in our lifetime people will ever see the rates that we've seen. You know, I don't know. I mean, it's a real good question to ask because, you got some of these folks that are first time home buyers and they've got a 3% rate, maybe even
yeah.
lower. I just don't know. It's going to be a while before we see something like that again.
It'll
Uh,
be, what's interesting is to see if, they're assumable, right? So maybe I assume somebody's 2 or 3% mortgage,
right.
but yes, and I fully believe that that's why the housing in this country is not in trouble because everybody's just sitting on these low interest rates. It's not good for the banks though because
Mm,
they're sitting on a bunch of losses on these loans, but they're not realized until the loan is closed. So
right.
it's not good for the banking system.
Right. Right. Let's talk a little bit about and by the way, I think you and I are on the same page on this one as far as the economic factors. I just think that it's going to be a while. I think, you know, I think we're hitting that sweet spot that you talked about at the very beginning where, the housing market is not going to be on fire for quite some time. I think it's going to be helped. And the other part of it is which segment of the housing market that the rate cuts really hit. You know, what I'm seeing is these really large houses. That's the hardest hit, part of the market. These smaller end homes, like 200 grand and lower, those market. I mean, those houses are cooking right along. The problem is the majority of those houses. Now, listen, I'm in a market where 200,000 is not a lot of money. Now, there's some markets. So you hear me say that number, you can almost think of it as like low end, middle, and then high. The low end side of the market, whatever that is, and you're in, the area that you're at least in the areas I've been in, they haven't skipped a beat. They're still building houses. People are still moving in. I mean, that piece of the puzzle is still
Well, they're
working
still building
quite
houses
well.
because nobody wants to sell their houses because of
Correct.
that they're sitting in the, and that's
Yeah.
interesting. And it'll be interesting to, those $500,000 or $600,000 houses, which is probably what you're talking about in the middle at
Yeah. They're the
7%,
ones that seem to be
6 or 7%. Yeah. So
Yeah, it just takes a lot more paycheck to own those homes now, and they're not moving. And those are generally speaking, at least in our market, they're our target customers. So anyway, again, getting back to the micro versus the macro economy, I think that's just something you have to think about in your own business. Let's get into kind of market specific factors. You talked about the pest index. It was down at 7 or 8, or I think it was 8, and then it was 14. It's back at 7. What do you think's driving that? Do you think it's demand, or do you think it's just like? By the way, I agree with you on a profitability and revenue side, but I mean, what do you think is causing? Like, first of all, you've already talked a little bit about what you're seeing. Now the question is pontificate, if you will, what you think is driving that.
So the pest index is down. It's not negative. It's still growing. The
Mhm.
public companies, so Rollins is up. Rentokil had an earnings announcement last week that hurt them pretty bad, which by the way, I would be a buyer of Rentokil right now if anybody.
Yes. Yeah, we need to
Um,
get a button like the
yeah,
Kramer show and
yeah,
start
like
smacking the button. Get,
buy, buy,
go,
buy, buy,
go,
buy,
go,
buy.
go. Yeah, yeah, exactly.
But because they will come out of it and they will
Yeah, they'll
come
come back. They'll exactly. Yep.
out. But so that's a company specific story. Rollins is just, there's a reason why they sell 7 times sales, right? When you talk about M&A and you say, oh, I got 3 times, 4 times, and you're pounding your chest at 4 times, Rollins sells for 7 times. There's a reason for that. Those
Mhm.
guys are extremely disciplined in their organic growth. They're growing 7, 8%, which is what a small company grows at.
Mhm.
That's and I'm not even talking about the M&A activity, right? So
Right.
uh, so I just think that you know it's a testament to our industry and how good we are, right? In 2008 and 2009, when the whole world was going to hell in a handbasket, and General Motors files for bankruptcy, we're there. We're good. But we're also not becoming billionaires when, crypto goes crazy or the internet boom happens, or, we're just a good solid industry.
Well, you know, let's be real here. And I have to say, and I don't have a man crush on Orchid. Well, maybe a little bit, but that's when they, in my opinion, cut the deal of the century when they bought the company from Syntex, when they bought Home Team from
Home
Syntex.
team. Yep.
That was just I to this day I still think that was probably one of the best acquisitions I've ever seen. But
Mm-hmm.
in any case, that's another story for another episode. So let's get into the fun stuff. Political factors.
So let me start by saying that you're probably a little left of me, and
Oh, for sure. Yeah. Oh,
and
yeah. Yeah, for
that's kind
sure.
of the way I roll. But I honestly do not think that the president has a whole lot of effect on the economy. I believe that when it's going good, they'll take credit. When it's going bad, they'll blame other people. And it doesn't matter which way you vote. That's just the way it is. The economy is this tsunami, and the president is riding a surfboard on top of it.
Right. Yeah.
And he or she, as the case may be,
Inherits.
yeah,
I
can't
tend to think
control it.
that the economy runs so slow, and I realize this is not gonna, this is not gonna make for good radio, and we're certainly not gonna get, I don't know all the sponsors that sponsor these, these shows that do, but ultimately, the economy is a lot slower than our political cycle. Not to say that a president couldn't screw something up really, but if they're doing the right things, it's
Mhm.
going to take a good 2, 3, even sometimes 4 to 5 years for you to actually recognize that's what's happening in the economy. I agree with you. It's just, but at the end of the day, it's like the damn stock market. It doesn't matter. It's
Right.
it is
But
emotion.
there are definitely things that the president can do to turbocharge it. You reduce taxes, you put more money in people's pockets, so that pushes the economy forward. But I don't believe, like you said, I think that you don't reduce tax. Number one, to get a tax bill through is a year and a half or more, right? And then then people have to file, so you're a couple of years out from that. But it's also the anticipation, right? So what do? You buy the rumor, sell the news. So that's, okay, I know tax breaks are coming, so I'm going to go out and buy some new trucks or whatever it is. So I think that that's one of the tools that they have. They also have, that the Fed has the interest rates, which you can push things up, and it's kind of interesting. This, the negativity, or the division in our country about how things should be, and or how things are going. The fact of the matter is, it really, you can say what you want, but like, the Fed cut rates the other day, not a lot, of half, right? And the stock market just zoomed up, right? Didn't matter that Biden was president or Trump's president. It's just, that's the way, you also have program trading and whatnot. And that's just the way things work.
Right. Right. No, I mean, the main thing is that, obviously we have this political season, which is, by the way, my favorite time. I just love it. All the ads and, oh gosh. Anyway, so yes, so we're doing this presidential election season. There could be political changes. Who knows? I'm not going to pontificate what's going to happen, because I can tell you there's been multiple times I thought Trump was done and somehow he made his way back. There's been several times I thought, I mean, everything I've thought, like, it's just been wild, right? I mean, like, it's just unreal how fast things can change. But, assuming that we have, and we talked a little bit about this with Dominique, if there is a change in regimes, right? There's obviously the economy, but there's also regulation, right? And
Right.
that's the part that I think we have to pay attention to.
From
Is
our
like,
business. Yeah.
yeah, what's going to happen on the regulation side? We talked about this whole big thing with the Farm Bill and preemption, and what's that going to be? And I think that's probably, if I'm sitting back and looking at what political factors do I really need to be paying attention to, that's really what I'd be, that's where we're going to see the impact, I think.
Mm-hmm.
As
Mm-hmm.
far as, like, wrapping up the season and what do we got to look at in 25 and what that's going to be all about. Because I do believe, from a regulatory perspective, it's not necessarily the president, but it absolutely is the administration. And what administration is going to be sitting there, and who's going to be making those rules? And that's something we got to pay attention to.
Well,
All right,
it's almost as if preemption. So uh, our industry is a little bit different in that we're rolling on trucks all day, right? So
Mhm.
if you are in a town that has a different rule than maybe what the state or the federal government says about a pesticide, because you run a farm, you know exactly how to operate. The problem is when you start rolling from town to town in a truck and the rules change, that's a problem, right?
Right.
And I just don't think that the politicians really understand that.
No, they do not. Well, I mean, it's like most things, right? None of them, I shouldn't say none. Many have never ran a business, and many don't
Right.
understand basic economic theory. Most
Yep.
don't. They,
Yep.
they think there's an endless well and you can just keep going. But anyway, I digress. Let's talk about what to do now. So we've kind of went through what's happening in the industry. We talked about some of the factors that may or may not be driving that, depending on your own beliefs. Let's talk a little bit about what to do. Now, we've done an episode. In fact, I think we did one maybe like a month ago on, I think, prepping for tax season, or maybe I'm making that up. Who knows? But
Right.
but in any case, what are some things? I mean, I can tell you for us, at Triangle, big things that we're looking at, for 2025 is certainly AI, right? I mean, we're looking for ways to get more efficient in the way, in the sense of, we talked about this before, is, how do we make that profit number either maintain or even get better? We're looking at things, how do we implement more AI into our business? There's a few other opportunities that we're looking at. What are your thoughts? What are some strategic moves that companies should think about? I mean, I know I have a whole list, but what are your thoughts on that? And then I'll come back in and talk a little bit more about what we're doing at Triangle, and kind of where my brain's at for end of, because this is where we really make our money as owners, right? When the season is out or it's a little bit lower, this is where you do your planning. This is where you do your reinventing. This is when all the movement happens, right? So I'm just curious to hear your thoughts first, Dan, before I jump into what we're doing.
Well, I think anytime you can raise efficiency through AI or whatever, that's going to be a good thing because you'll help with your margins. The other thing that I'm seeing is that the M&A market, contrary to some of the stuff that you're reading about private equity and whatnot, the M&A market is slowing, which means that that guy who's a smaller company who thought that he could get 3x for his company might be looking at 1x or 1.2x, real small companies, right? So you probably could get in that game now
Mhm.
at a reasonable rate. Now, I know that your experience with buying small companies is, you know, not, sometimes you buy a mess. So you got to be really careful in your
No, I would say
diligence.
that drilling
But
screws through my toenails is probably a better experience than that. But keep going.
but a lot of times, right? So when you hear about a company, well, we're doing 100 grand, been doing it for 25 years. You say, well, what have you been doing for that 25
Right,
years? Probably not the best company.
right,
But I
right.
think M&A is definitely something that you could look at because the valuations are getting more realistic. That doesn't mean for the most stellar companies, the valuations are still really good and whatnot. But I think that you have a shot at it. Anytime you can raise efficiency through better routing, that's also going to help with your margins. But the idea is to keep that puzzle, the pest control P&L, that puzzle at that 50 to 55% gross margin. And depending on what your chart of accounts looks like, it could be a little
Mhm.
more or it could be a little less. But that's, you know, that's you got to play a good defense. You got to block the net.
Right. Right. Yeah. I mean, and you kind of got on it there, which is, for us, I mean, the reality of it is that we're really thinking through AI, and more in line of just automating, right? Like, how do we continue to automate? How do we more and more dial in that gross margin? Listen, if you're doing triennial service with monthly billing, your gross margin should be north of 60%.
Oh, absolutely.
If it's not, then you really need to go talk to Dan or someone else, and you need to
By
figure
the
out what's going on.
way, we have clients that their route efficiency sucks. It's terrible, but they're doing 3 times a year with monthly billing and their gross margins are still over 60%.
It's crazy. It's
Yeah.
absolutely crazy. No,
Yeah.
I guess my point is that, the reality of it is that, for me, personally, what makes me feel good as an owner is when my gross margin is north. Our target, by the way, is 65. That's our target. When I'm north of 65, I know that if something happens with the economy, if something happens with our business, I can slam marketing shut. I can look at my G&A, and I'm going to be okay.
Yep.
Right. I'm going to be, I mean, a big recession can come and I'm going to be okay because there's enough profit there that I can move things quickly and I can keep my profit where I want it to be. So bringing it back to, what does this year mean? The big things for this year for us at least is going to be getting back on these cancels. For us, like I said, I talked about net accounts. Our cancel rate has went up. Is it a function of price increases? Is it a function of, is it a function of increased competition? The answer to that question is yes. It's probably a little bit of both. And so it's really understanding, number one is making sure that our efficiency is in place where it needs to be, but also our customer experience. Because the reality of it is that we're not a door-to-door company. We're never going to be, I mean, listen, we've had Fox on, we've had a few other really, really good companies on that do door-to-door, but that's a whole nother business, right? And one that we're not ready to do. And so bringing it back, it's really dialing in on the fundamentals of the business, which is our cancel rate, what's our CPL, what's our CPS, what's our customer experience like, making sure that I want to get back on top of these net accounts. I mean, it could be a function that, it's just where the economy's at, but that doesn't mean we shouldn't stop trying. And so for me,
Is there another strategy to use with Google? Like Google seemed to be this gold rush, and now it's so
Google's pretty well
expensive.
dialed in. I mean, the thing that I'm
No, I
seeing a
don't mean
lot of.
making money for them. I mean, how do you take advantage?
Well, I mean, the thing of it is this is like business is the same as it was 300 years ago. And what I mean by that is that, you get successful in business by exposing change. And the reality of it is that, you know, if you were on the front side of the rocket when digital first came out, you absolutely got to reap the benefits of it. The thing that's got me very interested now is AI and in what that looks like and from a marketing perspective. We are not seeing, search and people buying off AI yet, but I will tell you, I am very much looking at that. I'm researching it because I tell you more and more every day. For me personally, I'm integrating AI into what I'm doing, and I use it extensively. And now,
I don't
but
know whether because I'm a Gemini subscriber, but when I go on Google, if I Google a term, you can see the AI coming up. It's not just boom, here's the organic content. It's the AI thing, and that has a very powerful marketing piece to it. And I think
and
you're
it has
right.
significant consequences, right? I mean,
Yeah.
what if AI starts dominating? What if AI takes adoption to the point that most people are not using search anymore, and AI it's offloaded to AI, and now it's going to get much more. I don't say difficult. It's just going to be much more complex because we're always chasing this algorithm that we don't know, and we're looking at five different ranking factors and all like that. It's a whole nother level, right, when it comes to AI, because it's just not as fallible. Is that a better way of saying it? I mean, it's a totally different ball game. And so that's something that I mean, I don't think we're going to see that this year, meaning 2025, but certainly I think we have to start lining up behind it and still exposing where it's going, because that is the change in business. And I will say, if you're adopting early, you stand to gain the most. And so what I'm most people are thinking of AI more of the way of efficiency and certainly there's impact and potential there. The thing I'm very curious about is when is marketing going to come around, because there's massive benefits to be gained um, on the marketing side. So anyway, that's me. That's my pontification. Dan,
Just
anything to add?
a shameless plug for a guest that we had a few weeks ago, Andrew Ladder. I had my
Oh yeah.
call with him the other day about our business and what we can do with AI. And just in a few minutes, he showed me some really amazing things. And so if you ever, it's Louder and Company, just go to his website. And he's got a pretty neat little business there. But that's how you get yourself educated if you want to just, if you don't want to do all the research yourself.
Well, I kind of view it the way we do, traction, a few other of these things. I mean, you could spend a lot of time trying to do it yourself. You might want to get yourself an integrator or someone that can help you along the way, because it is a whole nother world. So,
Yep.
Cool. All right. Anything to add, Dan, before we finish out? Anything additional, I should say. All right. Well, cool. Well, you all have managed to spend some more time with Dan and I. I'll leave it to you to decide whether or not it was a waste. Just a reminder that all the resources and topics that we talked about today are available on the podcast website, pmpindustryinsider.com. Just take a look under the show notes for that episode. And we always appreciate any ratings and reviews that you can give us. And Dan gets a little frustrated when I say complaints and just general negativity towards him.
I've
which
been
is
married
why I
for
continue
33 years. That doesn't bother me at all. So.
And with that, we're signing off. We'll see y'all next time.
Take care.
Bye
Bye
now.